When interest rates were higher, it caused a lot of fear, not just in the economy, but also in the markets. Now we're starting to see it decline. So this is what I do believe also. Always remember that we came from a very, very high base. If you came from a very high base on the previous year, there's a larger chance also that should you need to exceed that high base, it will take a larger amount. Before we continue with the video, I'd like to invite everyone to Investment Conference 2023. This is an event that we co-founded about 10 years ago with the goal to educate people about investing and different investments that are out there. We have a lot of speakers from Randall Chongson, Rex Mendoza, David Lichu, Alvin Ang. But what's interesting for this year also, since I've been pushing and I've been a very, very big advocate of Web3 cryptocurrencies and NFTs, we're adding crypto into the mix. If you want to venture into crypto and NFTs, check out the link down below. It's happening May 27, 2023 at Samsung Hall. We're gonna have 1,000 people, 1,000 investors joining us. So I hope to see you there. See the links below and back to the video. Philippine inflation has dropped to 6.6% for April 2023. Please do note that we're seeing now a downtrend on how the monthly inflation rate has been going. Just to get you through it one by one, we saw it start to push up at the end of 2022. We saw it go from 8.1. Then at the start of 2023, January 2023, we saw it go to 8.7%. Then February, 8.6. So please do note, 8.7 is high, 8.6 is also high, but we started at the reversal trend. March 2023, it went to 7.6%. So 8.7%, 8.6%, then 7.6%. And now we're seeing the lowest monthly inflation rate at 6.6%, which is still high. Please do note this. This is something that's still very, very high compared to where we want to be. If you're looking at sweet spots, 2% to 4% range, we're not yet there. But the fact that we're seeing inflation start to ease a bit, I think it's something very, very good. If you watch the previous video also, I mentioned that the US may ease up on its rate hikes. I think this goes hand in hand also, that as inflation starts to ease, it will also provide a greater framework also that should the US start dropping rates, we may also see the PSP drop rates here as well. So if you've been following my videos and you're investing in the Philippine stock market, I mentioned that one of the things you watch out for is how inflation is. The higher it goes, it's not as good for the Philippine economy, especially from a consumer-driven economy. However, as inflation starts to ease also, this will be better for consumption. This will be better for people who'd go out to Jolly, to Pancake House, to Shakey's, or those that are doing grocery shopping maybe at Pure Gold, or they go to RRHI. RRHI has department stores also and a supermarket. So in essence, this also gives more spending power. At least it gives stability in terms of people spending. And what's interesting about that is there's psychological component to it as well. What do I mean by that? If prices keep going higher, psychologically, people think that, okay, things are going higher, prices are more expensive, I think I don't want to spend more. I think I'll taper off on my spending. So please do remember that aside from the BPO industry, aside from OFW remittances, one of the things that has kept the Philippine economy afloat even in the 2008 recession, and we've seen it to be one of the biggest pillars, is domestic consumption. And the more Filipinos spend, the better it will be for the Philippine economy, and the better it would be also for listed stocks that are highly connected to consumption. This is just me putting things into context and bringing things full circle, that when interest rates were higher, it caused a lot of fear, not just in the economy, but also in the markets. Now we're starting to see it decline. So this is what I do believe also. Always remember that we came from a very, very high base. If you came from a very high base on the previous year, there's a larger chance also that should you need to exceed that high base, it will take a larger amount. Hence, coming from a large base, that's one of the reasons also why rates are relatively lower also right now. That being said, one of the things you could watch out for is how the next quarterly earnings would come out for companies. that are highly connected to consumption. So if you notice it, if inflation is lower, then it gives confidence for people to spend. Let's see how it will be from a quarterly standpoint. And here's the thing, financial numbers, economic numbers, are relatively a lagging indicator versus the stock market. The stock market is pretty much a leading indicator because it's sentiment-based, it's opinion-based. It's either if people are so excited, it brings prices up, or if people are so fearful, it also would bring prices down. And that's what I'm trying to convey to all of you watching. You need to realize that from a stock market point of view, from a trading point of view, when you see numerical data like this, you try to look at it from a stock market point of view, what's happening to the price. And I made a video on the PSEI just a couple of days back, and I mentioned that it still needs to break out of the 7,500 range. Otherwise, it's still gonna move sideways. It's not gonna go anywhere until we see it break out from that particular range. So for price movements to be sustainable, it also needs to have the backing of fundamentals, macroeconomic data or company-specific data. Because if you see movements in a particular stock go up, you see it push up, but it's not followed by fundamentals, then there's a larger chance also that you could see that crash again, correct again, or you may see that move up to be something that will be short-lived. So what will make push-up sustainable is if it's backed up by fundamental. The more economic data, the more company-specific data that are positive, and then you see the market start to push higher, or you see it start to break out from the 7,500 plus range, then whatever price movement is something that is backed up by something, it has substance, then it removes the fear that what's gonna happen to this? Is this something that's sustainable? And in the same way, that could be also your technique in terms of spotting companies that have value, companies that you think are good. Why am I saying this? If economic data is good, company-specific data is good, but the market isn't going anywhere, the stock that you're actually watching isn't going anywhere, it's not actually moving, it's still sideways, it's not actually breaking out, that could be a buying opportunity also for you, especially if you're a long-term investor. Please do note that if you're trading, it's a different set of strategies, but what I'm saying is if you are a long-term investor and you see value in it, or there's a lot of positive things happening from a fundamental perspective, but the price is not following, then that could be your window also of opportunity to start to stack, to start to add, to start to build a base on it. Because later on, when majority of the market discovers it, or there's a spotlight into it, please do remember that over the short term, the stock market is pretty much news driven. That sometimes if there's a lot of positive data, but people don't catch up to it, or it's not where the spotlight is, then not a lot of people will buy. Always remember that people are driven by their emotions when they invest. People are driven by news. Should there be discounts, should there be unique buying opportunities on some companies that are amazing, but nothing's happening to it yet, that's an opportunity for you also as an investor to spot it and to start stacking towards that direction. I do believe that's how everything is taking place. If you're a Filipino living in the Philippines, then I think you could take this as something that's good news, because it's now starting to decline. We want to see it though start to go down lower and to be at the lower end of the spectrum as well. And as it creates a more optimistic scenario, which will cause people also to be more liberal also on their spending, which will eventually also affect companies that are listed. And as it affects companies that are listed, it will eventually affect their bottom line. Their PE ratios will start to go down. The market will discover it as a discount and they start buying, and you see it start to go up. Or if they start earning more, also because people start spending more, then dividends that may be given out for next year may be better as well. So that's how you can actually look at it, and that's how you also somehow weave through economic data and interlace it with company-specific data, and interlace it also with price movement as well. I hope you guys got a lot from this. If you want to know more about the stock market, check out the books that I've written below, the seminars that I have. They're all in the description, and I do hope that this is something that gives you tremendous value. If you want more about the stock market, I've created thousands of videos in this channel, all dedicated to bring more consumers to investors. And if you heard it at the start of the video, join us for Investment Conference 2023 in Samsung Halls with hundreds of Filipino investors there. And I hope that this is something that's helping you and gives you value. If you stayed up until the end, I'd appreciate it if you could press the like button, comment down below, and subscribe so you get updated every time I come up with new content about investing. So that's it for now. Marvingermo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon. God bless you all.